So definitely want to throw out there that I totally respect how you like to talk about be careful when you're scalping. Some of the indicators work better when it's short term, but it's not affected by the Trump news or whatever. But I like when you said, you can be right 9 out of 10 times scalping, and then that one scalp will wipe you out. So I totally in line with that, and I like that idea about trading for the long term, and then you avoid the daily noise that can wipe you out with that little stupid wick that kills you, right? But that also gives you guys the time to build, right? And I appreciate your advice today, reminding me today, be careful during the Christmas time, because yes, things can move like very violently because of the low volume. And this big swing for no reason, and then big swing down the next day. So take this time to learn, like he's saying, and I want to know in your trading plan though, do you factor into your predictions just the weekly? So looking at the other perspective of not trading too short of a time frame, do you look at longer time frames than your 1 week prediction? Do you factor that into your decision making, like where the economy might be in a year or two? Because you said you watch the economy.
So the structure stuff we went over today. When you guys start seeing structure on the higher time frame, so today we looked at AUD/USD on the monthly, right? On the monthly time frame, we're seeing that it's coming to that sell to buy candle, right? We talked about it today, and so they've already mitigated off of that position. So all that really means is the higher time frame is important because you're seeing the overall direction of where the market's headed, right? So the best thing about it is just following the trend. You just want to you use the higher time frames to see which way the momentum's going. And then you just follow the momentum, right? 80% of your guys' trades should be going with momentum or going with the trend. And 20% should be like reversals and stuff, right? So really, it's just zooming in and zooming out of the time frames. But great question, bro.
Great job, Rob. I got a question.
Nah, it's not like that. So check this out. So when I was talking about the guys 20 years ago, they were using indicators, right? I was talking with him earlier. We were talking about indicators. When it comes down to indicators, they're a lagging instrument. They tell you kind of what. My bad. Indicators are like lagging instruments, right? So they kind of tell you what's happening after the move's kind of already happening, right? So especially in the forex market, that stuff just kind of comes and goes. So the stuff that we were going over today was just like real market geometry type stuff, like the way there's a science and there's a way that the markets move. Like they don't move willy-nilly. They move like specifically. These patterns repeat. Like the same stuff I'm showing you guys today, you can go back in time looking like the 80s and 90s and so on and so forth, right? So a big part of the way we're doing it is we're playing off of where the banks are moving the market, right? So first off, we learned how to identify where they enter and exit, right? Like manipulation-wise. And then they play off of those same points several times. So where they exit and enter is pretty much where we're exiting and entering, and where their targets are and so on and so forth. It's not like perfect. It's not like I got a homie at the bank saying, yo bro, we're about to get in this trade, come on. Bank of America, like Texas. It's not like that. It's just like based on what we've been able to learn and the consistency of it, we've been able to see what happens. And I mean, yeah, we take losses too, bro. Like, I mean, losses are gonna happen no matter what. I mean, like LeBron hits your shots, right? But you just keep moving. And the thing about these concepts too, it's I don't know, like the guys from like 20 years ago when I was talking about that, so you said in 5 years would it be obsolete. It might not necessarily be obsolete, but there might be more information that we can add on to it to make it better. People back then, they were just, they were. I mean, it was less information back then too, right? What's good, bro? Hopefully that answered everything. All right, thank you, bro. Great question.